It's Tuesday, March 17th, 2026, and right now silver is trading between 80.50 and 81.50 per ounce. It is hovering just above that critical 80 support level after a brutal little pullback from the early New York highs. Listen up, because if you miss what I'm about to break down in the next 20 minutes, you could literally miss the biggest move this quarter has to offer. Prices just ripped over 130% higher in the past year. We're already up 12% year to date in 2026 alone. Yet the smart money is circling like sharks while retail traders are getting chopped up. This isn't some random dip. This is the moment where fortunes are made or lost. I'm Yali Jiang from Silver Signals, here to hand you the exact roadmap so you don't get left behind. You and I both know the stakes are sky high right now. One wrong move and your account takes a hit you can't recover from this quarter. But stay with me, because we're about to dissect every layer of this market. I've been trading silver for years, calling these turns for my Silver Signals community. What we're seeing in 2026 is nothing like the spikes we've lived through before. Remember last week when we spiked toward 84 before getting slammed back? Or those war-driven peaks in past cycles when silver briefly touched $30 or $40, adjusted for inflation? Those were temporary safe haven plays fueled by headlines that faded fast. But this year is fundamentally different, and I'll show you exactly why in a moment. The structural supply deficit isn't going away. It's accelerating. The industrial demand that's exploding right under our noses is rewriting the entire playbook. Let's talk about the charts first, because price action never lies. Right now, it's painting a story that's screaming opportunity if you know how to read it. On the monthly time frame, the macro trend is still powerfully bullish. We've been carving higher highs and higher lows since the start of this bull run. Even with today's slight 0.3% dip, we're holding well above the 200-period moving average. That long-term uptrend channel we broke out of earlier this year remains intact. The Fibonacci extension from the 2025 lows is pointing us toward $95 to $100 as the next major target once we clear 82.50. Pause for a second and think about that. Monthly momentum is still intact because the big picture forces haven't changed. Now, drop down to the daily chart for the weekly structure. Here, we're seeing classic consolidation after that massive early 2026 surge that took us briefly to $100 in some sessions. Price has formed a tight range between 78.40 support and 82.50 resistance, with clear wicks testing both ends. Yesterday's candle closed right in the middle, showing indecision. Notice how volume is picking up on the dips. That's institutional accumulation, not retail panic. The daily RSI is hovering around 55, not overbought. It is giving us room for another leg higher without needing a deep retrace. On the 15-minute chart during this New York session, we're seeing precise supply-demand imbalances play out. Early session highs hit 81.59 before sellers stepped in, creating those textbook upper wicks. Every time price kisses 80.20, buyers swarm back in. AgZag USD is respecting the 61.8% Fibonacci retracement from yesterday's low to high perfectly. If we hold here and the DXY starts to fade, which it often does when Fed speakers hit the wires, we're primed for a breakout above 82.50 by the end of the week. You see the pattern. Multi-timeframe alignment like this doesn't happen every day. That brings us straight into the fundamentals that make 2026 completely different from anything we've seen in previous cycles. The structural deficit in silver is no longer a theory. It's reality. Mines are struggling to keep up while above-ground stocks continue to drain. We're talking hundreds of millions of ounces in annual shortfalls that central banks and industrial buyers are fighting over. The real game changer this year is silver's exploding role in the 2026 AI boom. Every new data center, every advanced chip fab, every high-performance computing setup needs massive amounts of silver for its conductivity and thermal management. We're not talking incremental growth here. We're talking structural demand that's doubling in certain sectors. Layer on top of that the solar explosion. Global installations are projected to hit record levels again this year, and silver paste in photovoltaic cells remains irreplaceable. Then you've got EV expansion. Even though batteries get the headlines, the wiring, connectors, and power electronics in every electric vehicle are silver intensive. With major automakers ramping production targets for 2026 and beyond, that demand curve is going vertical. This isn't cyclical. This is permanent. While gold gets the safe haven spotlight from Middle East tensions pushing oil higher, silver is quietly doing double duty as both a monetary metal and the ultimate industrial play. Physical markets are already showing backwardation, meaning buyers are paying premiums for immediate delivery because they can't wait. That's how tight supply is right now. The Federal Reserve's upcoming FOMC decision is hanging over the market like a storm cloud. Expectations for near-term rate cuts have faded fast. CPI data coming in hotter than anticipated is keeping the dollar supported for now. That DXY correlation is dragging on XAG USD in the short term. Once the Fed signals even a pause in hikes, or better yet, hints at easing later this year, The dollar will roll over and silver will rocket. We've seen this movie before. The difference in 2026 is that industrial buyers aren't waiting for lower prices. They're bidding aggressively because their production lines can't stop. Central banks, especially in Asia, continue to diversify reserves. While they talk gold publicly, silver flows are showing up in the data as well. You combine all that with the safe haven bid from geopolitical risks. Suddenly, today's $80 level looks like the bargain of the decade. The market psychology at these levels is treacherous. The whales are out in force, running their classic liquidation hunts. You've probably felt it. Price dips to $80.02, retail stops get triggered, then boom, it bounces 50 cents in minutes. That's not random. That's institutional hands engineering liquidity to load up before the next leg. Watch for the bull traps, especially if we fake a break below 80 and then reverse hard. Stop loss hunting is rampant right now because everyone is clustered around those round numbers. The 78.40 area is the next obvious target if sellers win today. I don't see it holding for long given the physical demand. Smart money is using these dips to accumulate, not distribute. That's exactly why you need to stay disciplined. Don't chase the wicks. Wait for confirmation on the 15-minute or hourly timeframes before you pull the trigger. We've covered the charts, the fundamentals, the macro drivers, and the psychology. Now let's talk about what this means for your trading plan this week. If you're positioned long and holding through this consolidation, you're in the right spot. Size matters. Use tight stops below today's low if you're aggressive. Trail them using the daily structure if you're more conservative. For those of you still on the sidelines, the 80 to 80.20 zone is your entry sweet spot. It comes with a measured move target back to 82.50 and then 85. Risk reward here is easily 3 to 1 if you manage it right. Silver doesn't move in straight lines. Expect volatility. Expect fakeouts. The underlying supply-demand imbalance is so skewed that any meaningful breakout above 82.50 could ignite the next 10 to 15% move in a matter of weeks. That's the kind of momentum that changes portfolios forever. If you're finding this analysis valuable so far, do me a quick favor right now. Smash that like button. Drop your price prediction for the end of this week in the comments. Whether you see us breaking 82.50 or testing 78 first, and subscribe if you haven't already. It takes 2 seconds, and it helps me keep delivering this level of detail for the entire community. Look at the correlation with oil right now. Middle East tensions are keeping crude elevated, and that indirectly supports silver as an energy-intensive metal both in production and in its end uses. Add in the upcoming CPI prints and any dovish Fed commentary. The setup is primed. We've seen similar setups in past cycles, never with this level of industrial tailwind. The 2026 AI boom alone is projected to add hundreds of millions of ounces to annual demand that simply wasn't there 5 years ago. Solar capacity additions are accelerating in Europe, Asia, and right here in the United States under new incentives. EV adoption isn't slowing, it's speeding up. Every single one of those trends requires more silver than the market can currently supply. That's why the backwardation in futures isn't temporary, it's structural. That's why whales are hunting stops at these levels instead of selling into strength. They know what's coming. Silver at 80.50 to 81.50 isn't the top. It's the pause before the next explosion. The monthly trend is intact. The daily structure is coiling for a breakout. The 15-minute chart is giving you real-time entries if you stay patient. Fundamentals have never been stronger. Psychology is playing right into the hands of those who understand the game. The macro catalysts are lining up. Don't let fear of missing out push you into a bad entry. Don't sit on the sidelines either while the biggest move of the quarter builds. If you're new to silver signals, welcome. We've been calling these turns all year, from the early surge past $100 down to this healthy consolidation. Stick with us and you'll stay ahead of the herd. If this breakdown helped you see the setup clearly, hit like. Comment your prediction for silver by Friday. Subscribe so these 20-minute deep dives land in your feed every single time. Your support keeps me in the trenches, delivering exactly this kind of analysis for sophisticated traders like you across the United States and around the world. This is Yali Jiang from Silver Signals, signing off on March 17th, 2026. Trade smart, stay disciplined, and I'll see you in the next one. Let's make this quarter count.